Hello, good evening. Good evening. It's another time. We are here and here we go again. Hope we can all hear me. Yes, good evening. Welcome to Trade with Creatovers, Creating Wealth Nations. We are starting right away. We've spent some time waiting for the late comers. So we go right away. And it's been awesome so far, so good. It's been awesome. Day one, day two, and here we are, day three. It's been awesome. It's been impactful. Yes. I just want to encourage everyone to always join on the call late. I guess it's because we've been sharing recordings. People are coming late to the class. But no problem. We know that people will join us on the call as we continue. So, like I said, welcome to Trade with Creatovers, creating wealth nations. We've gone through day one. We've gone through day one talking about forex overview. This bootcamp is basically created and planned for beginners, especially to enlighten them of the forex market. And the one we spoke about forex overview and basic terminologies that is being used in forex. And if you are not here in the one, the recording was shared. You need to go back and listen to the recording. Yes, the one we said, the one forex overview and terminologies. Day two, we spoke about fundamental analysis. The three is today we'll be talking about technical analysis. Yes, and we mentioned that if you have the courage to begin, you have the courage to succeed. You have the courage to begin, you have the courage to succeed. And we spoke about what is forex. Forex is foreign exchange. We spoke about what is being traded in forex. Money basically is being traded in forex. Currencies is being traded in forex. And then we also mentioned apart from currencies, commodities are also traded in forex. Commodities like oil, like gold, coffee, they are traded in forex. Also in forex, we trade stocks. Stocks is like shares. So we take stocks like Facebook, Apple, Google, Microsoft. I also trade indices also, indices such as Germany 30, US 30, Nasdaq, S&P 500. Indices are a basket of stocks, basically. And I will said what the market runs to in the market is the largest and most actively traded market, and it's over 7 trillion. We're just doing this So we said we trade forex via market analysis. And under market analysis, we have what technical analysis, we have fundamental analysis, and we have sentimental analysis. And we've spoken about fundamental analysis, talking about basically news, and we also said there are different types of traders, and day traders, swing traders, and position traders. We also mentioned the best time to trade forex, and then the various sessions that are available and timing for forex trading. We also mentioned brokers. As a forex trader, you need to have an account with a broker because that's the only avenue whereby you can buy or trade forex. And we also said you need to know that these brokers are genuine. We spoke about currency pairs, We spoke about the bid price and the ask price. We spoke about the major pairs, the minor pairs, and the exotic pairs. All these are in the previous videos. Please take time and listen to them and catch up for the class. And spoke about margin swap. We've done quite a lot. And we spoke about market orders all in day one. Yes, because I would say the market orders are what instructions that you give to the broker to place trades with specific details. And we went on to day two and we spoke about fundamental analysis. Spoke about fundamental analysis, and we spoke about various things that affect the economy, the key economic indicators such as interest rates, inflation, gross domestic profit, which is GDP, the retail sales. We spoke about the industrial production, spoke about consumer price index, unemployment rate, geopolitical tension, and natural disasters. These are the various things that affect the economy, and in turn, as these factors or indicators affect the economy, they also affect the country's currency. Yes, they affect the country's currency. And we talk about CPI news. Especially, we analyzed CPI news yesterday, and how people can take action once the news comes out. And we saw the impact. So, no much volatility, but the report and how it's moved the market. So, welcome to day three. We will basically looking at technical analysis and also looking at some chart patterns that we'll see in the market or when we see on our MetaTrader 4, MetaTrader 5, or on our trading view as the case may be, or on any brokerage platform, you'll be able to understand and interpret what the candlestick means or what they all represent. Like we said, the patience and self-discipline are your greatest friends in trading. You need to be very much patient and you need to be very disciplined. You have to inculcate those habits. And talking about technical analysis, which is what we are discussing today, technical analysis is the study of historic price movements in order to identify patterns to determine probability of future direction of the market. The reason why we are looking at technical analysis is for us to be able to predict correctly the market direction. Technical analysis aids traders to identify where to buy and where to sell in the market. Yes, where to buy and where to sell in the market. I would say there are three basic assumptions of this ideology. Market discounts everything, prices moves in trends, and history tends to repeat itself. Those are three things that we need to have at the back of our mind, that yes, market discounts everything, price moves in trends, and history tends to repeat its history tends to repeat itself. History tends to repeat itself. Technical analysts use price chart to identify similar trends and patterns that are formed in the past in order to form trade ideas that have a higher probability of success, believing that price will act the same way that it did before, same way that it did before. Yes, and that's what all technical analysis has to do. And then let's also look at what are the things we see in forex charts. Yes, what are the things we see on our forex chart? When you open a forex chart, you also see a line chart, you can see a bar chart, you see candlesticks, and you see a Kinashi chart. But for this purpose of this bootcamp, we'll basically be looking at what the Japanese candlestick chart, because that's what we always use and see most times on our chart. The line chart is just to filter the noise by displaying just a single line, ignoring the price action between the operating and the closing prices. So basically, we look at the Japanese candlestick pattern and chart. The Japanese candlestick chart is the most commonly used visual representation of price. It is also the most easy to understand. Yes, when you see the candlestick for the Japanese candlestick chart, you already know that, okay, yes, there's a bullish candle and there's a bearish candle. A bullish candle is formed when the closing price is higher than the opening price. Yes, a bullish candle. And a bearish candle is formed when the closing price is lower than the closing price is lower than the opening price. And in that way, we always also use colors to denote it. You can use any color of your choice, black, white, but most time we see that people use the green and red or blue and red. So here to your right, you can see that it's denoted with what? Green and red, which is what we use most of the time. And we know that yes, the wick, there's an upper shadow of the candle, and there is the body of the candle. There's a lower shadow of the candle. The upper shadow is the high. It is what the highest point where the price got to when that candle is being printed, and the lower shadow is the lowest price where price got to when it was being printed. And we notice that for the green candle, we can see that the opening price and is below the closing price is above, meaning price moved up. Then for the red candle, you can see that the opening price is above while the closing price is down. And that's what formed the body of the candle, meaning price decreased. And that's why when price decrease or when price is going down, we see bearish candle was formed. And when it's going up, when the closing price is higher than the open price, we say it's a bullish candle, meaning it's a green candle. So we also need to look at trends and price movements. Like we said, that market moves in trends. So market moves in trends. And trend is the tendency for price to move in a particular direction over a period of time. And this can be long term, it can be mid term, it can be short term. The three types of trends: the upward trend, the downward trend, and consolidation or sideways. As you can see from the diagram representation, we can see that for the upper trend, price moved from a low to an high, then formed a higher low to a higher high, higher low to a higher high. That's what upward movement. You can see like a step going up, going up. So a low, a high, a higher low, a higher high, higher low, higher high. Then when it comes to the downward movement, you can see that there was a low, there was an high, then a low, then a lower high, lower low, lower high, lower low. That is basically how price moves. Price does not move in a straight line. It doesn't move in a straight line. It moves up, down, in zigzag, in trends like that. When we say trend, it's a trend. When it's moving up, down, up, one, and keeps going up, that's an upward trend. Moves up, down, and forming lower lows and lower highs, that's a down trend. And in an uptrend, the overall direction of price movement is upward, known as a bullish trend. As you can see, overall price for an upward trend is upwards. Overall price movement is upward for a bullish trend. The upward movement is zigzags, moving from higher highs to higher lows, like I said earlier. And the downward trend, the overall direction of the price movement is downwards, also known as a bearish trend. You can see from a bearish trend, the price keeps going down, moving in zigzag format, forming a lower high and a lower low. And we also need to talk about consolidation. Consolidation is the price movement lacks a clear direction. When there's a trend, it comes to a point where it just consolidates, it moves in a sideways. You can't really see whether it's going up or it's coming down. It's just moving sideways. So we say what the price movement lacks a clear trend direction, which means there is an indication that price is about there's an indecision about the next price movement. This usually occurs at the end of a major move as the bulls and bears fight over the next direction. There are three types of consolidation patterns, which are sideways, upwards, downwards, sloping ranges, and triangle ranges. So these ranges, we're going to look at them so that we can understand when a price is moving sideways or when a price is moving upwards. Yes, sideways price bounces horizontally between specific area of price of high price and low price. So we see that price just keeps moving in between two areas, up and down. It does not really give a clear direction. We say what the market or the price is what ranging, or we say what is what consolidating. Consolidating or ranging all means the same thing. And the trend and price movement continuation will look at what the slope ranges and the triangles, the ascending channel, the descending channel. Like I said, price moves like that. We can see different types of ranges that we can actually identify on our charts. The triangular ranges, prices bounces within a specific range, but what it forms a triangle. So we just need to get familiarize ourselves with this kind of triangle because we'll be looking at it over time when we post additional insight on the market structure, because we're going to look at it. These are going to be forming what basics of those further educational materials that will be shared. You need to understand that what triangle it moves in triangles like up and down between a specific area. So we see what price is still what consolidating at this point. Price is still consolidating. And when we look at the areas that price is consolidating, is between what two regions, and those regions are actually what support and resistance, and which leads us to our next topic, still under technical analysis and charts. A support is not an area or a zone that holds price from falling lower and changes direction and begins to what rise. So support is an area or zone that holds price. So assuming the price of a currency was moving downwards in a downward direction or in a downward trend, when it gets to a support, we will notice that what price will refuse to break that point or that area and possible change direction. And a resistance is an area or zone that holds price from what rising higher and changes what direction and begins to fall. So when we talk of resistance is above, support is below. So when price gets to a support, it doesn't move lower beyond that support, and it changes what price and begins to it changes direction and begins to rise. And when it gets to a support, when it gets to a resistance above, rather, it doesn't go higher than that area, and it changes what direction and begins to fall. So support is below, So, like I said, support is below and resistance is above. Support and resistance is a zone, like I said, not just a single line, it's a zone covering a small range of price, which helps us what identify possible points where the market could possibly change direction. Let's take a look at this example here of a market that was ranging. As you can see, those three arrows there, as you can see, that's the yellow region marked and a above and below they are what support and resistance region. The one below is the support and the one above is the what resistance. Prices could not move beyond those zones. When it got to resistance, could not move above, and when it got to the support, it could not what go lower. And what when price breaks a support or resistance, it often tends to continue to the next support or resistance. So when a major support or a major resistance is broken, price continues. So when a major support or a major resistance is broken, price continues to the next support or resistance. It's a broken support may potentially become a resistance, and also a broken resistance may potentially become a support. A support or resistance is a region that will temporarily will delay rising or falling of price within a larger market. Within a larger market, and a major support or resistance is a region that stops what an uptrend or downtrend market trend that causes what a change in market or price direction. So in between support and resistance, there are minor supports and there are major supports. So a minor support or resistance is basically a region that what temporarily what delays price from rising or falling. Then it continues like we can see in this direction here. Look at this trend to the right, and then we can see that the price was ranges there. So there was an uptrend, then it ranged for some time before going up. So that's like a what a minor support and resistance, just holding the price there in a bit before breaking it. Then these are also some other kind of support and resistance that we see. So support and resistance might not just be sideways, it might not just be a straight line, it can be dynamic. Like we can see here, there's an ascending channel channel horizontal channel. So price can still be moving in a channel upward and be what it's. So there is a support and resistance that can be straight line or dynamic. And also we said what ascending channel. So price can be moving in an ascending channel in between support and resistance. It keeps moving in between support and resistance. You can see the price hits the resistance, it changes, hits the resistance, moves down. And when it goes below, it hits what? The support, and it what? Moves up. And in forex trading is like running a marathon. The key to finish this race is what? Self motivation and perseverance. It's what? Self motivation and perseverance. So these are basically some of the things that we see in forex trading. Then also there are some basic chart patterns that we also need to look at. Some basic chart patterns that we also need to look at so that when we see them on the chart, we'll be able to what? To identify them on charts. We'll be able to identify them. There's what we call what the head and shoulder pattern. As you can see, head and shoulder pattern, triple head. It's what? Head and shoulder. So what it forms kind of the upper one is kind of taller than the shoulders, as you can see, and it was there was a neckline. This is what double top, double bottom. As you can see, there was a downward movement. Then it gives us what? A place to what? Can use it to trade and what? You enter your price there. There was when you see ascending triangle, you will notice that there was an entry point at some point when someone takes the channel, then you know, yes, it's a form of trade. So this was when we saw this, if the what looks for better work, this triangle high and it was practice also and what break so it breaks down, don't identify this, where you know what keep and these are all the candlesticks that you are seeing. So the trading bible will be shared because it's going to help us to have more understanding and more insight. And like I said, all successful traders started as a beginner. Trust the process and stay disciplined. We already said it, yes. Trust the process and stay disciplined. Patience and discipline is all we need as a trader. Patience and trade is all we need. Is all we need as a trader. We also just look at how to identify some of the support and resistance zones that we have marked out. So let's just look at chart, let's look at it. So let me share this. So as you can see, the gold did this gold. There's some of the levels that has been marked on gold. As you can see, the price is on an uptrend. Price was on an uptrend, and immediately it got to, let's look at 4 hours. We'll see the uptrend very well. That the lower. Let's look at the lower time frame so that we can identify basically how we see uptrends. How we see uptrends. You can see the price was moving up, but it wasn't moving up in a straight line. It was giving us what, of a higher high, a higher low. This low is higher than this low. A higher high, a higher low. It came here, gave a higher, this is called a higher high, higher low. Gave here a higher high, came back here, give us a higher low. It has given us a higher high up here now, so we should be expecting to see what it will do. But here I'm suspecting it might give us a change in. So basically, we need to keep visiting the chart and look, we need chart time to understand and see what has been taught so that you'll be able to identify it by yourself. And that's why we are here to also and hold you to see that yes, you are able to identify some of these patterns. You're able to identify some of these patterns. So that's that. See, that's that. And we'll be doing some other reviews and we send it to the group from time to time so that we can always learn from there. Especially the market structure video, we're going to do that and post there because we notice that most of the people here are newbies, so we need to take the chart patterns and how to understand all those chart patterns first when they see them in the market. So we need to take out time, open your chart, look at the chart and identify what is the market consolidating, is the market in an uptrend or a downtrend. So that's the assignment I want us to do. Open your chart and identify what the upward trend and downward trends. Remember, upward trends gives you what a higher high, higher low, higher high, higher low. While a downward trend gives you what lower low, lower high, lower low, lower highs. And a ranging market or a consolidating market is just between 2 points. So we need to identify these patterns and send to the inbox of the admin, and it will be marked or just reviewed basically. Yes, but take out time, even if you're not submitting it, take out time to check the chart, and you will see that at least train your eyes to identify these patterns yourself basically. And also we will share the Japanese candlestick Bible. It's beneficial, it's informative. So we need to share it so that you can also go through it and read it. And that will be bringing us to the end of day 3. And trust me, it's getting better because you need to identify charts, you need to see what is going on. And after that, we're going to also give you the opportunity to see how you can actually what manage your money and manage your risk. Manage your money and manage your risk. So basically, thank you for the 3, and this comes and brings us to the end of today's session. Um, thank you for your time on the call, and do have a wonderful evening.